So now that we understand high and low resistance signatures, we understand liquidity. Now let's talk about high and low resistant liquidity runs. Right? So obviously, if we have a market that is here, okay, any movement back up in this direction is what we're going to reference as a high resistant liquidity run. All right. Because if we're trading back or we're trading basically counter to what side of the curve we're on, in this case, we're on the sell side of the curve, right? Any move up, we're trading a high resistant liquidity run, right? This is where there's gonna be a lot more turbulence in terms of price reaching any type of desired targets or things of that sort. The better condition to trade in is allowing price to come up here, seeing order flow change, and now you're trading the low resistant liquidity run. All right, LR. Okay, why is that a low resistant liquidity run? Because if we're on the sell side of a curve, right, and we'll talk about institutional order flow, that means that price is more protective of these premium points. All right, so it's more protective of these areas. All right, it's more protective of the highs. Right, and it is willing to easily make new lows. All right, so these down close candles on this side of price, these guys are being taken out. All right. So when I'm taking these trades in the direction of the low resistant liquidity run, okay, I can have a lot more conviction and a lot more trust in knowing that price is going to make that new low or at least run to or through my terminus because I'm trading the low resistant liquidity run. Now, depending on the overall market condition, all right, let's say that we could be looking at a market, right? So let's basically we're gonna take this image, okay, and we're gonna draw it to a different scale, okay. So let's imagine that we're in an overall market. Let's say we're here, and this is a daily down close candle, right? Daily order block. We're in a market where you know we're bullish from that daily perspective. So we're seeing these daily down close candles, okay. But what's happening is we've saw price rally up, right? Now what we're seeing is we're on the sell side of that curve. Let me draw this, right? We're on the sell side of that curve, okay? And one more time, right? So we saw price rally up here. Now what we're gonna do is we're gonna take this, duplicate it, and we're gonna bring it over here. We're gonna just kind of resize it. Okay. So now what's happening is when you understand order flow, okay, and understanding order flow, we know to what extent price is going to rally lower, right? And we know to what extent until we start to get closer to the high resistant liquidity run, because this at this point will be a high resistance signature. All right, this low, we run that low out, and then we rally higher. Okay, so now from a zoomed out perspective, all right, obviously price creates that short term low, right? We rally here, all right, and at this point, you probably not be as willing to take those short opportunities, but you understood that price needed to rally where we're seeking discounts. This is the discount array. So this every low becomes a low resistant liquidity run. Okay. Now, as we make it down into this area, okay, once we start to see a shift in market structure, change in order flow, and things of that sort, all right, notice right here, high resistant liquidity, high resistant signature. All right. Now we start to understand that these highs All right, you can see price is kind of left that little signature there, right? This is going to become the overall, right? This high is going to come the low resistant liquidity run, right? You can even see here, okay? It's going to become the low resistant liquidity run, all right? So you can trade in line because you understand the higher time frame order flow. Okay, this could be a larger market maker buy program. Like I can literally take this one more time and we can put this down here. All right, and we could be looking at down here, we have our smart money reversal, reaccumulation phase, right? This is just that reaccumulation phase. All right, but you're seeing what's happening inside of that reaccumulation phase. All right, now what's happening is price is turning around and this becomes this whole thing, but actually back to this high becomes the low resistant liquidity run. So now you're trading in line with that low resistant liquidity run, right? Every time you take shorts, you have to understand you're trading the high resistance, all right? Because price at this point is now more protective of lows and down closed candles, all right? Notice there's buying interest from this area here. We'll speak about that at a later in a later topic. However, we can scan across price, all right, and we'll know that price finds interest from that area also, right? But overall, these are those low resistant liquidity runs all the way back to this high. Okay, so whenever you're in a market, right? The reason this is important, whenever you're in a market, you want to understand under what terms are you trading, right? You're trading the high resistant liquidity run and low resistant. You're going to come out better trading that low resistant liquidity run. All that means is you're trading in line with that current state of institutional order flow, right? Respective of the overall outlook. Okay. And the reason you want to understand the overall outlook is because I can understand as I'm taking these trades here, right? These may be intraday trades. This could be any time frame. As I'm taking these trades, I understand my gauging point. And once I get here, as I get closer to the more parent order flow, now I have to start being a little more conservative in terms of seeing this as a low resistant liquidity run because I'm running into a high resistance signature, right? That is respective of a higher time frame or more apparent order flow. All right, so it may be more productive to allow price to trade into here to see if we start to create high resistance signatures off of that area. Now we start taking the high resistant liquidity run trades. All right, understanding that price should trade back to this overall high, right? And this high is that buy stop liquidity pool or buy side liquidity pool, doesn't matter, right? And then this whole thing is a market maker buy program, right? Hope you guys do well with that.